Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. It's my opinions, thoughts on the market. You can read more on the disclaimers below. I have many. So let's get into today's stuff. As promised, we're going to go on the economic data first. You see, mix the bad, which has been the theme, and that I think looking at this in a 6 to 8 months view since last year, we're getting mixed to bad, and that's why the market's sort of on a slow decline. Right now, we're on a bear market rally, but if you look at it, global manufacturing 50, while that is S&P global manufacturing, while that is a positive, it's less than the consensus of 50.7. And if you look at the ISM manufacturing PMI, that's 48.7. That's in a contraction. And construction spending, that's negative 5%. So forward looking construction, that means things aren't being built. So this is mixed to bad. Now the ISM manufacturing 48.7 did beat the forecast of and consensus of 48 to 47.2. But you can sell the ISM manufacturing that is in contract what's it called? It's in contraction. So and look at this, US manufacturing is grappling with rising cost and margin pressure. So yeah, manufacturing having problems. Uh Tomorrow we have the jobs reports. We'll see how those go. Lie some more. That's my thing. So we'll see what they say. But just a couple of news items too. I was just going this. You can see Amazon shares fallen, disappointing AMS and soft guidance. And I was always saying this AI thing, uh, Amazon revenue, this is slowest growth, slowest pace of growth in 5 quarters. So this is the AWS, which is the web services that focuses of artificial intelligence. So it's the AI, which was supposed to save the economy, but it's not doing well. In all fairness, Apple had good earnings, so I try to be fair, but it was just iPhone sales. Nothing innovative, great. We were promised AI was gonna nothing that could take the economy to the next step. Other thing I want to do is this corporate earnings. This is tells two different stories. So, and they said this was like, you know, two different stories. So they're saying consumer largely unaffected by trade. Well, yeah, of course. These tariffs are nothing. The press makes a big deal out of them, but uh, look at this: consumers staying disciplined and not overextending shopping habits. Well, yeah, they're disciplined because if you don't have money to buy stuff, then you're going to be disciplined in how in not spending money. So, and then they say in the second view, consumer more closely tracks those downbeat surveys. Well, yeah, yeah. So disciplined. These are new code words for they stink, but we don't want to hurt the market. So yeah, they say some houses choosing to hold good. I'm looking for the just the 2 minute elevator, choosing to hold off big ticket items or rushing to get, or some are rushing to get ahead of tariffs, which common consumers not at all. It's big business really. So And I do think though some of the people, like if you look at iPhones, those are probably made in China. I don't know where they're manufactured. Let's see, where are US iPhones made? So the vast majority are assembled in China. So I can see, and maybe that explains why Apple's earnings were good. A lot of people wanted the most. I've had the same phone I had for years. I don't really buy a new phone unless it breaks. But yeah, that would actually explain why Apple did so well and everyone else. But I think this more shows Atlassian downbeat quarterly revenue. So Atlassian fourth quarter revenue below estimates as enterprise customers cut spending on cloud softwares services in a tough economy. So this is, I think, more like most tech companies. I think Apple's more of an outlier. Amazon had good earnings, but you saw with the guidance, the AI is not doing well. So you can see that, they're struggling. And to show more about, the bad economy, look at McDonald's sales. Remember what I always said. And if you don't, I remind because I say a lot of things, but we're in trickle up poverty. And this is going to start showing in the data. And it's why the market's not making new highs. It needed Trumphoria, something made up or believed to take it to highs. Is that look at this McDonald's sales slump as low, and now they're saying middle income consumers are feeling heightened anxiety. So remember before, if you've been I've been following this McDonald's story, it was just a low income consumer. And so, yeah, first quarter earnings missed on Wall Street, drop in sales and traffic weighed on the results. And I mean, McDonald's is a brand name. I mean, I understand the health problems and everything, but Americans still eat there. It's an American enterprise, American franchise. People go there for a quick bite to eat. Uh, but and look at this, a 3% decline from the year period. And they even said, if you look at it, look at this. Global operations fell by 1%, which that is concerning because I've been to McDonald's in Eastern Europe and it actually is very good. But look at this, 3.6% drop in US same store sales as fewer customers visited McDonald's in its home country. In fact, the last time I was in Poland, I forget where, I was on the highway. I've never seen a McDonald's so packed. But McDonald's actually, but I mean, there it's actually good. It's not like American crap. So anyway, but look at this. Traffic from low-end consumers fell nearly double digits versus the private quarter, and that middle-income customers fell nearly as much, while visits from high-end consumers remained solid. So just remember this. Trickle up poverty. Last year, it was just the low-income consumer. Now it's the middle income, and next year it's going to be the high income. It's called trickle up poverty. And remember this, people can say whatever they want about wealth or entrepreneurship, but you're only as strong as your weakest link. And that's true. That's a sports quote, but it's true in real life too. And it's true with the nation's economy. You're only as strong as your weakest link. Look at the 2008 housing bubble. Started out with the poor, but everyone suffered. So, and then look at this Forever 21, which, I don't buy this high income because this is really closing all 354 of its locations in the US. So this is actually a clothing store. I mean, everywhere I go, I live in the richest parts of America. So everywhere I go, I see this. So I'm assuming this is a high income. I could be wrong. But forever, most recognizable names in fast fashion, global brand, it's closing. So this isn't a store poor people shop at. So All operations in the U.S. have already began liquidation sales at more than 350 locations. Chapter 11 bankruptcy. So, so look at this. All sales in U.S. stores and U.S. website are now final. We will no longer be accepting returns or exchanges. And they're no longer offering new gift cards or credit cards. Well, they still have international stores. Look at that. So, remember what I said last video? People in other countries are richer and they have higher standards of living than Americans. May not read about it in America, but it's absolutely true. If someone knows, as most of my relatives don't speak English, and they don't speak Spanish either, so they speak another language. Trust me, it's me. So anyway, Airbnb, here's the last thing, more housing market update. Airbnb flags slowing U.S. travel demand. Revenue forecast disappoints. So you can see the economy's horrible. So what I think, this is why, what's the point of me showing this? The data's nixed the bad. The markets are now starting to reflect that. They're talking about the tariffs, but it's really not. But the reality is, I always say, they're going to need a stimulus. You see Trump making fun of Powell, telling them to lower interest rates. I think a big stimulus sometime in the year is going to be come. That will probably be the final blow off top in gold. I don't know if we'll make a new high on the markets or not, but I think they are. If you look at it, the markets are up somewhat today. It's up right now. But I think the markets are trying to price that in. So let's see where interest rates are. Interest rate. What is the 10-year? TNX. Look at that. 4.2%. So on the 5-day, it's down 1.72. 1 month up 1.8. 6 months down. Interest rates are down 2.98. Year to date down 7%. So and if you look at the year to date stock market, everyone talks about interest rates 7%, 7%. Interest rates, I just showed you interest rates are down year to date. Stock market, that's down 4.9%. Now on a 1 year, it's up 11, but year to date. So why is the economy's bad? And inflation, and we're entering stagflation. So wait, is gold really up? No way, this can't be right. Wow. I'm gonna go to Kitco. I always go. I thought gold was down today, and I don't really. Oh, it's only down 190, and it was down a lot. So, yeah, we'll see where gold is. I think it's in correction. I read somewhere that if it breaks for 320, it's going to be right now it's 323.9 or 3200. So that could be support. Some new guy who called the gold correction at 3500 thinks it's going to 3200. It could be 2900. I think the next leg up is, and I still reiterate, silver's going to 50. I think it will go to 50. So anyway, that's all I have to say. We have the jobs numbers tomorrow. Let's see what that goes. Trying to do as many videos. I say it's a heavy data economic week, so just remember the disclaimer: not financial advice, my opinions and thoughts on the market. One of the things I'm hoping to do is I think after the crash, and I don't think we're at the crash yet, is when there's a capital rotation into foreign stocks and whatever. I do want to have a service letter and I'll show how I evaluate stocks. Part of it, just my mind. You don't have my mind, so you won't be able to. Part of it is guessing, so I'm pretty good at that part, and strategy and whatnot. I would love to say open a consulting business, but not really. I'll just write about stocks and companies and maybe, but that's way off. I don't want to start a product that's not going to last for years. I think this gold, there's going to be one more upswing and then I would love to start picking stocks. I just don't want to track the regulator. So I just talk about the markets and whatnot. And I don't want to talk up some company and it goes bad. But anyway, that's all. Hit that like button, subscribe. I'm starting to ramble now. Uh, and I will see you next video. And just remember the disclaimer, not financial advice.